What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. Today we're going to talk about the price action in the indices. We're actually going to talk about the trades that I did today. As you may be aware, I've really been not having that much trading volume for the past week and a half. I actually did do some trades today. Before we do all that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Last but certainly not least, do not YOLO your entire account into any one of my trades or anyone's trades for that matter. All right, let's dive into our box scores. So today we had some pretty wild action. We had some moves to the downside. We had some choppy action. Then we had a reversal intraday. Then we moved to the highs, and then we ended up closing off of the highs. So a lot of intraday action, a lot to talk about today. S&P 500 finished out the day up 0.51%. We had the NASDAQ finishing up just 0.24%. IWM small caps finished down at 0.36%. The Dow Jones finished up 0.34%, And we had the ARK Innovation ETF finishing down 1.17%. That was our worst performer on the day. Take a look at the daily range. What you'll notice is that most of these indices, they actually closed at the upper end of their daily range. And you can see the volatility contracted in all of these indices as well. Breadth was pretty mixed across the board, but the small caps by far represent the most of the market, and they actually had negative breadth. So overall, I would say the breadth was on the weaker side. My trend model has been at a -1 for maybe the past week or so, and I've really just been making sure, okay, the market is my dance partner. I want to make sure that I'm not stepping on my dance partner's toes. While the trend model's at a -1, I don't want to be going too crazy with swing positions. Today that changed intraday, so I did get a little bit more active. We were at some key levels, so we'll talk about that in a moment. Finviz heat map. Once again, we had select areas of the market that were really showing some significant outperformance, primarily just healthcare, which is a very defensive area of the market, consumer defensives, and energy. The rest of the market was pretty mixed. You can see there were some standouts like Tesla, like Applied Materials, but other than that, really just a mixed tape. Sectors. Healthcare is now in our top momentum slot, finishing up 1.92%, followed by biotech, followed by utilities, consumer staples, medical devices, real estate. So what you'll notice at the top of this list, this is always ranked in terms of momentum, it's all the defensive areas of the market. And then what really got hit the hardest today? Chinese technology down 3.86%. Pretty much every time these Chinese technology stocks look like they're about to make the turn, then they just end up falling back to earth. And then you can see our regional banks ETF, blockchain ETF, those were also down for the session. Style factors, pretty much all green except for cyclicals. And the best performers were the low vol. We had the momentum style factor and the defensive. So although we had a rally, primarily the defensive areas of the market are the ones that are really carrying us higher. All right, let's take a look here and we will check out the technical roadmap. So S&P 500, we're now up 0.41%. So we're just trying to make sure that we're following the technical roadmap. Now what we're beginning to see is a pattern of lower highs and lower lows, which would characterize a downtrend. My trend model is at a -1. Yesterday we got a bit of a weaker dark index print, which in my process that is definitely more on the bearish side. And take a look, we had some key levels to contend with today. So we have this 200-day moving average, which we ended up closing above. We had the 20-day simple moving average. We have our monthly value area high right here at 4428.25. And then we have the 50-day moving average just a smidge below that. So this is really like the chop bucket, no man's land, where you just have all these levels clustered around each other. Now let's pull up our hourly chart just so we can see what actually happened today. So this right here is our weekly value area, and we've been trading below the weekly value area. And look at this, we ended up having a pretty sizable dip intraday. We hit the lows right around lunchtime at noon, and then after noon, this 1 o'clock, 2 p.m. hour, we really just blasted off to the upside, and we regained all of the ground that we lost in just 2 hours. So definitely really just a sharp move higher in the afternoon, a huge acceleration. And I'm sure there were some players that shorted the market down here at around 44.50, maybe even over here around 44.55, maybe over here around 44.55. and those players likely got squeezed into the end of the day. Now keep in mind, in terms of this weekly value area, we still have not reclaimed it. So it's not like, oh, the coast is clear, everything is bullish now. Far from it, but definitely good to see that the market rejected the lows once again. But what I will say when we just zoom back out is we're not really getting like a firm rejection of this 20-day simple moving average. Really what you'd want is, okay, dip buyers come in and then we just zoom off to the races. To be honest, this was a pretty weak balance, I must say. Hey, it's great that we rejected the lows. We didn't even get to this monthly value area high, but we rejected the highs as well. We couldn't get above that 5-day moving average, and sellers did step in. So for tomorrow's session, what are my expectations? Most likely, I wouldn't be surprised if we're tagging that 20-day moving average again tomorrow. What the market tends to do is, as it's trying to pick a direction and as it's balancing, it knows there's pajama traders at every single level that are just hiding out. They all want to either get long or get short or whatever. So pretty much what the market does, because a lot of these institutions are using algorithms that specifically do this, they're seeking out all of the liquidity at the different areas. So it's very rare that we just like spring off to the upside. A lot of times you will do a lot of bouncing around to all these key levels so you can round up everyone's stops. So given that, hey, this wasn't a spectacular finish, literally in like the last 10 minutes we lost so much ground, I really don't think we're out of the woods yet. And if you're somebody that's pretty bullish on the market, it's definitely not a good thing that we weren't able to close above 4,500. So you can look at this really in a glass half empty or a glass half full way. Glass half full is, wow, we pulled back, we undercut the 20-day moving average, and we rejected the lows and we closed green. That's great. We trapped a bunch of shorts. Or in the more bearish way, if you're looking at the higher time frames, like for instance this weekly chart, hey, we're still trading below this 20-week moving average, and we're still stair-stepping lower on this daily chart. I mean, for all we know, we could get another balance day, and then suddenly the market is no longer oversold, and then from there we might take our next leg lower. So yeah, certainly not out of the woods by any stretch of the imagination. Let's pull up our NASDAQ. NASDAQ held support at this monthly value area high. So that brings me to the trade that I did today. First trade that I wanted to do was get long at 44.28 on the S&P 500, but we just did not get there. So let's take a look. I will show you what I did, because intraday my trend model did start to flip around. At one point it flipped to -3, then it flipped all the way positive. So I was like, okay, this is my cue to go ahead and take some risk here. So check this out. I did do some options trading and I made a couple bucks in options. So I got long, this was around 2 p.m. I got long some QQQ May 20th 352 strike calls for 1345. I just put here we had every reason to fail at support, but dip buyers stepped in. Think we might be able to squeeze some poor location shorts. And what happened was I was like, okay, I can take this with a very tight stop. I'll stop out below this monthly value area high. Pretty easy, can get a nice clean entry. Well, and this is actually something I'm pretty pumped about. My stop hit just 20 minutes later, stopped out for like a 21-cent loss. Very, very tight, very small. And I'm super happy about that. It's like perfect execution for me. And then what I noticed was right when I stopped out, I set my alert right back. And I said, hey, if we go back above my trigger, I'm jumping back in this thing. And so that's exactly what I did. I was able to get back in for 1381, and I had a nice winner trading these QQQ calls. So yeah, ended up working out, made a couple bucks, and I ended up not taking that trade into the close just because we did not close on the highs. Again, we have this pretty ambiguous picture. And I just said, hey, I'll make a couple bucks and I'll hit the exit. And then I did add to my TLT May 20th 130 strike calls. So TLT, this thing, the bonds are really moving, man. Bonds are moving and grooving, and you can see we took out this virgin point of control down here at around, or was it like 125.87. So we took out that VPOC, and I do think that these bonds are starting to get a bit oversold, and that could actually be what the Qs and what the S&P 500 are front running. we've had a pretty vicious move lower in these treasury futures, and bond yields are moving higher. Let's say tomorrow we get a really nice bounce in the bond market. That lends itself to some nice equity performance potentially. So that could be what the market is starting to sniff out. These 30-year treasury futures also got slammed. Now real quick, let's see how much time we got here. Let's pull this up. Yeah, we'll go through some charts because I want to point out that even though the market's weak, there's some oddities under the surface. So CCJ, this is a uranium name. This one blasted off to the highs here. So there are some stocks that are in uptrends that are really moving to the upside on nice volume. So we have CCJ breaking out above value. What else do we have here? But then I notice a lot of these stocks, they're the most defensive stocks in the market. Like for instance, BJ's. BJ's, I actually have a membership there. It's basically like discounted food when you buy it in bulk. And so that's not like a sexy company. It's not like they're innovating, changing the world. I'm sure their margins aren't great, but these are the kinds of names that are ripping out to the upside right now. So when the market's like this, that's not really the ideal environment for me. Sure, you could get long a bunch of consumer staple stocks and you'll make some money if they go up. What tends to happen is like if you catch these names like perfectly, you might catch like a 10% move. And then if you just happen to be in when everyone starts rotating out of them, you can lose that 10%. Like it might take you like a month or two to make it, and then in like 2 days it's gone. So consumer defensive staples, I don't really traffic in those names all that much on my trading account. Another one is Costco. This one also, again, blasting off to the highs. What do we have? I noticed some defense names that were doing pretty well today. Lockheed Martin breaking out of value. And this is not a super overextended stock. First day out of the monthly value area. Same thing with, which one was it? Raytheon, RTX. Nice break higher here. We're not outside of value yet, but we're above this monthly point of control. Yeah, healthcare, which is our top momentum slot. This one is breaking out to new highs. So imagine that. Overall market's pretty weak. Most of these indices are well off their highs, but these healthcare names are looking pretty good. Some names that are actually looking like, hey, maybe they're actionable for tomorrow. This KBR, pushing right up against the top of value. Not too bad. Definitely worth setting an alert on. We have this KZR. This one looks very interesting. This is a biotech company, which I don't traffic in as much. Take a look. We're finding support right at that 20-day moving average. And then we have finally this one as well. This one doesn't look quite as good in my opinion, but yeah, this box. We broke below the 20-day moving average. We likely shook some players out. Then we moved back above value on high volume. So we're seeing a mixed bag. We got some of these more defensive groups leading. Tomorrow we're still going to be trading right around a bunch of support levels. And so I think, for this market environment, it's all about taking a measured approach. And, it's all about being as selective as possible. I'll tell you the traders that are getting royally effed in this market. And it's the traders that they want to trade every single day. And, either they're trying to get long stocks every single day or they're trying to get short stocks every single day. Like, it's tough to just keep doing the same thing in the market. It was actually pretty fun today being a little bit more active. Oh, and I'll show you, I also got long GBTC. So this one, take a look here. I did some stock trading as well. I sold some Jumia puts today. I sold these 9.5 strike puts, and I was able to collect 41 cents in premium. So it's not like the sexiest trade ever. It's not like, oh my gosh, I'm going to be rich overnight. But for this market environment, it's all really about just getting like base hits while the market is in a pretty fragile state, I must say. And then GBTC, this one I did take for a long entry. And this one, we weren't able to finish above the monthly value area, but we are finding support right at this 20-day simple moving average. So yeah, definitely stay vigilant. There's better times ahead in the market. Right now, it's all about surviving. It's all about being selective and really just following your own process every day. For me, that is using my trend model, making sure I'm staying in line with that, and really just looking for the highest quality setups I can find every single day. With that being said, that about does it for this video. Hope you all enjoy the rest of your evening. I'll see you all tomorrow.